Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Adhish Patil, CFO at Aarti Drugs joining in. Welcome to the show, Adhish.
Yeah.
Adhish, my first question coming to you is, if you have to have a look at FY21 as a whole,
Mm.
how would you describe it, and did it meet your internal expectations as well with regards to growth?
Yes, it definitely matched our expectations because definitely we got the advantage in the first quarter and the first half of the second quarter last year. The prices had gone through the roof, but then they normalized in the month of August 2020, and since then the prices are quite stable. So now the business is quite stable, but we feel that there will be a lot of volume growth in coming years. There wasn't much of volume growth, though there was around 50% volume growth was there. But the utilization of capacities was quite low in the last financial year. It was almost around some in late 60s, which typically is in late 70s.
Hmm.
Uh, so that volume growth we are expecting in the coming years, but the rate benefit we got quite a lot in FY21. So it matched our expectations on an overall basis, but there are a lot of factors which we think which we can do much better.
Hmm, hmm, hmm. Right. So, Adish, overall, if you have to look at the different segments of business between APIs, formulations, and specialty chemicals, all have contributed in FY21. From here on, which segments are expected to be growth drivers?
So whatever greenfield capex which we have planned, which the real fruits of which will reap by end of 5 years, in that we have planned for a big anti-diabetic expansion, and there are a lot of intermediates and specialty chemicals as well in that. So almost I would say 60% of the revenue growth which is expected from these greenfield projects is from intermediate and specialty chemicals, and around 40% would be the API. But meanwhile, we are also doing a lot of brownfield expansion, incremental expansion, or putting up a fresh facility within the existing location. That also we are doing. We are expected to do three kind of expansions in this financial year itself. One for chlorosulfonation product, and other is for this gliptins, and one antibiotic product.
Hmm, hmm. So, when you're talking about the launch of gliptins as well, when is it expected, and what's the kind of revenue accretion are we seeing?
Yeah, so in gliptins, we already successfully launched one product commercially. Means we had commercial level batch,
Hmm.
and we were able to achieve the targeted results in terms of efficiency, our RM consumption norms also, which is good. But we have done it in another multi-purpose facility. The main facility for these gliptins will come very soon. The reason we were not able to put it right now is because we had a huge demand of the products which are manufactured in that facility,
Hmm.
in the adjoining facility, and we need to take a little bit of shutdown for putting a gliptin plant. So that is the reason why it is delayed. And incrementally, gliptins as such are very big products. Means means overall potential of these gliptins might be in 300 to 400 crores. But then the facility which we are putting will be quite small. This will be more from the point of view that we'll be launching this product for the first time in a multi-purpose plant, which will be a regulatory plant, by the way. So once the sales grow, then we might require to put another dedicated facility for gliptins as well, because they can be a very big product in future.
Right. So, what's the kind of revenue contribution are we expecting, from?
80 to 100 crores is what we expect in this facility. From revenue standpoint, it doesn't look that attractive, but bottom line should be more from this facility because it is supposed to be EDQM approved
Hmm,
facility.
hmm,
So it will be in a regulatory environment. And once the scale grows, then we will have to put another big plan for gliptins.
Right. Moving from the anti-diabetic segment, if you talk about fluoroquinolones also, you are one of the leading manufacturers. Now, recently the government of India introduced anti-dumping duty as well on ofloxacin and overall ofloxacin acid. If you could just help us understand, with this anti-dumping duty, what's the kind of benefit does the industry see, as well as what's the quantum of benefits do we as a company see?
Okay. Just few things. Ofloxacin and O-acid duties are not there right as of now.
Okay.
They expired in last year itself. Uh, as far as ciprofloxacin duties, it is there. This is the first year, and they have given for 5 years in total. So still 4 years to go. Definitely, it helps the industry quite a lot. In the sense that sometimes what happen, if I will give a general case, if a
Hmm.
particular intermediate and API both are manufactured in China. Sometimes what they do, they intentionally sell intermediate at a higher cost and then sell the final product at a lower cost, so that Indian players are not motivated enough to manufacture that final API. Or if they want to, they will have to start right from the scratch, something like that.
Hmm.
So in this case, anti-dumping duty does help, because if the prices are of the raw materials are artificially inflated and the prices of the finished products are lowered intentionally, because they don't have intention to sell, but they just want to keep the price low because
Hmm.
they are earning somewhere else. So in this case, anti-dumping duty does help Indian manufacturers.
Hmm.
And as far as we are concerned, because in ciprofloxacin we have major market share
Hmm.
in terms of production capacities. Also, we will be uh, maybe uh, more than 50, easily more than 50% of the total India's market share, production capacities, I would say,
Hmm.
would be ours. So
Right.
definitely, it will benefit our Cipro sale in the domestic market.
Right. And Adish, with regards to vitamins and anti-inflammatory as well, you were looking at a multi-purpose facility which was under construction, and I think due to COVID, that was on hold. Earlier, when we spoke as well, we were expecting a revenue of around 50 to 30, 35 to 50 crores per annum as per product selection. Now, what is the status of the same?
Right. Yeah, I would like to correct a little bit on that. That particular facility is adjoining to the our USFDA facility.
Okay.
And that was the reason why we have kept it on hold. The
Hmm.
building is already ready. So if we take a
Okay.
decision to put a product, then we can do it in around 6 to 8 months, which will be much faster than the greenfield project. And plus, in that same area, we have a space for another production plant, and that will be in adjacent to the USFDA facility.
Hmm.
So our plans are, once we get this FDA cleared, and if it happens, then we can amalgamate that particular section with the under the same FEI number, and have much larger production capacities for US market.
Hmm. Hmm.
So then so we have kept it reserved for the US market. So we are not doing anything as of now in that facility.
Okay. And overall, with regards to specialty chemicals, formulations, what's the outlook going ahead?
Yeah. So formulations, we are doing quite well. We have registered across a lot of geographies, more than 300, 400 registrations we have done. Uh, a lot of them we have got approved also. So
Hmm.
our export market will grow exponentially in formulations, and that is where the margins lies. We are not that active in domestic market. We are doing only toll manufacturing, but export market we are focusing quite a lot in formulation. So they will do well. And specialty chemicals, definitely, that is one very big area of expansion for us.
Hmm.
As I said, that around 60% of our greenfield projects, we are expecting revenues from intermediate and specialty chemicals. And we are not venturing into anything risky or unknown territory, because
Hmm.
these are the products which we already manufacture in
Correct.
batch manufacturing form. But then now we are going for continuous processes, so efficiencies will be much better, overheads will be much lesser. So we are quite confident in getting success in this particular product category.
Hmm. And if you look at the R&D pipeline as well, what is that looking like from here on?
Yes, so we have quite a few products apart from this gliptins.
Hmm.
We have antifungal product also. Then anticonvulsant is also there, and there are quite a few which we are doing piloting for those products. And wherever we feel that there is a good chance of get capturing the market and all, then only we'll launch. Because the thing is, not everything which we do in R&D goes into commercial. So we keep on trying a lot of products, and if we find success in a particular thing at a pilot stage in terms of efficiency norms and everything, the market conditions, only then we go ahead. So anti-diabetic, antifungal, anticonvulsant are already there. Animal feed product is there. Then skin treatment, which is a part of this greenfield capex, chlorosulfonation products. So a lot of products are there as such in our pipeline.
Mm-hmm. So overall, with the new launches, with the, new projects that we are undertaking, what's the kind of capex requirement that we will be having in FY22 and 23 if you have to look at 2 years from now?
Yeah, very very broadly, it should be definitely 350 up, something like that, for
Okay.
2 years combined. Definitely this second wave of COVID, the construction activities have taken little bit of hit because of the second wave. So that delays plans little bit, no doubt
Mm,
about that. But otherwise, we are in good shape in the sense that we just acquired 1 lakh square. We were allotted, means we had
mm,
already applied earlier, but we were allotted 1 lakh square meter land in GIDC for this intermediate and specialty products. One we already have, and we got another one. So that will be the place where we'll do this close formation
mm.
expansion in
And
future.
and how do we plan to fund the expansions?
So we plan to fund one. One is the first most is internal accruals, and then we will take term loan also. Um, Whatever term loan we take, it we will be hedging it. Even if we take in foreign currency, our policy is to convert it into Indian rupees, so we don't have any currency risk. Because the cost of debt for long-term funding is very good, very attractive as of now.
Mm, mm.
So that will additionally, benefit. I means give a kick to ROE also because of the this debt leverage.
Right. And Adish, taking government incentives into consideration, a lot of PLI schemes that have been launched by the government as well. Anything that we could take advantage of, and if yes, what's the kind of benefits we see out of the same?
Yeah, they recently means just few days back they came up with the guidelines. So we are
Mm,
under the process of studying it. But a few weeks back they had put out a, 4 or 5 pager note on the same. Uh, so based on that note, prima facie it is we fall in the category where we can take benefit of that. Means
mm.
whatever conditions have been laid down in that particular note, we will be easily satisfying that. So very good, in a very good position to get advantage of that, no doubt about that.
Right. And Adish, between domestic and exports, what's the kind of revenue breakup do we do, and where are you seeing more growth from here on?
Yeah, so on a API front, it is typically 66 34 or 65 35,
Mm,
65 being domestic market. Uh, in earlier years, means around 4 or 5 years back, we were consistently doing 60-40. But in last 4 or 5 years, the domestic sales have grown very exponentially as compared to
mm,
export sales. But then in coming years, means as everyone is talking about this China plus one strategy, which will play out in longer term for API industry as well, for us also,
mm,
because now global players would want to diversify the country risk, because they have seen that one country can shut down their supplies anytime. So it is better to have two countries. So definitely Indian product will have a natural demand in the export market. So export will also grow in the future. We would like to achieve that 60-40 split again in API segment as well. As far as formulation segment is concerned, we feel that more than 50% would be export going forward, means in the
mm.
coming quarters or coming years.
Okay. And overall, with regards to all of this now, if you have to look at FY22, what's the kind of margin growth that we are targeting, volume growth? And with all these expansions, where do we see that milestone revenue that we plan to cross?
Yeah, so uh, we are looking in anywhere, means between 10 to 15% we should be able to achieve in spite of this.
That's in terms of volumes or margins?
Volume,
Okay.
in terms of volume. Volume as well as value, because we have, when forecasting these numbers, we have considered the latest selling prices, so which are quite stable. So we don't expect any fall of API selling prices from here. So it should be fairly easy to achieve. So we are expecting an entire volume growth. And as far as margins are concerned, if we normalize that first 4-5 months of FY21, then we still feel that with the current product basket, 18% EBITDA margin is doable. But with this new greenfield projects coming coming in line, coming in production, then our margin should definitely go upwards of 20. Means once the utilization of those products goes high.
Right. And any milestone number that we plan to cross in terms of revenues?
Yes. So on a console level, means earlier we were talking about 4,500, but 4,500 to 5,000 crores of turnover is fairly achievable. Means nothing too optimistic about it, but it will take time. Means in next 5 years, we feel that definitely our revenues should hit 5,000.
Right. And Adhish, there have been a couple of questions that the viewers have been sending as well. One is with regards to the talks of a QIP, which was later backpedaled. Could it have been handled better by the company? Just a well-wisher who's asking a candid question.
Yes, definitely. There are a lot of things in the business which could have been handled better, no doubt about that. And in hindsight, the thing is, the reason we it was more about we made that option ready for us, because at that point of time we had one opportunity for acquisition also. And that is the reason why we just took a board approval. But then the thing is, in public limited companies, whenever you take some board approval, it is published. So it was not that board had announced that we are going to do it. It was just the news of we have taken that as an option as well. It was not announced as if we were going to do it. But then in the market, it was the news was absorbed like we are going to do it. So it was not like that. So we have a better funding route. So that is the reason why we are not going with that QIP as of now, because we think that will be more expensive for the existing shareholders.
Okay. And very lastly, overall on the buyback front as well, any reason why the promoters at full capacity, participated in the buyback?
Yes. So the thing is, if we go back, means last more than 25 years, if I remember, we have been consistently giving shareholder payouts by the way of dividends. And recently, we have been doing that in terms of buyback as well, because we feel that is a much efficient way of distributing wealth to shareholders, existing shareholders, and that is the only reason. It doesn't affect promoters' shareholding in terms of percentage ownership much, because because the prices are attractive, so everyone participates. So if everyone participates, then the percentage shareholding ideally means principally should remain same. So that way the ownership remains same.
Remains the same. Right. All right, Adhish. Always a pleasure speaking to you. Thank you for this candid conversation as well. Good luck for the coming quarters. Speak to you soon again and stay safe.
Thank you. You too.
Thank you.